Hello and welcome to the final episode of the current series of Debit Credit Done, the podcast that makes accounting understandable one step at a time. I'm Dean and today we are rounding off our journey with a deep dive into the statement of financial position. This is the perfect place to pause, and we've taken you through the key building blocks of bookkeeping from debits and credits, through journals, ledgers, and the trial balance, all the way to the two major financial statements. Before we wrap up this series, I've got exciting news about what's coming next. But first, let's review the challenge I set you at the end of episode 7. So your task last time then was to prepare a statement of profit or loss using the following figures, which I've displayed on the screen. Sales revenue of £18,000, wages of £5,000, rent of £2,400, electricity £600, insurance £400, and then depreciation of £1,000. So let's go through the steps of how we prepare a statement of profit or loss based on these figures. So firstly, we want to work out what our total expenses are. So we can look at all of those figures. We've got wages of £5,000, rent £2,400, electricity £600, insurance of £400, depreciation of £1,000. So we've got total expenses then of £9,400. Now remember that net profit is equal to income minus expenses. So the income in this case is the sales revenue. So sales revenue is £18,000. Just calculated the expenses as being £9,400. So net profit £8,600. So if you got all that right, then well done. If not, go back, have another look, try it again. These are the core calculations that feed directly into today's topic. So today then, we're going to look at the statement of financial position. And the statement of financial position shows the financial standing of a business at a single point in time. So it can be thought of as a financial snapshot. Yeah, it shows what the business owes, what it owns, and what belongs to the owner. So at this point, I'm going to introduce this thing known as the accounting equation. So the accounting equation simply says that assets is equal to liabilities plus capital. Yeah? And we call it a financial position because it tells you exactly where the business stands at that moment in time, which is very often end of a month, end of an accounting quarter, or more typically the end of the year. End of the accounting year. So what does a statement of financial position look like? So a statement has got 3 main sections. Yeah. Assets. So these are broken down into non-current assets. So things the business uses over a long period of time, like, for example, equipment, vehicles, might be property, These non-current, using them over a long period of time. Current assets, things that you own, but you're not going to use them over a long period of time. So things like cash. Cash balances are changing all the time. Bank balances, you're going to use that money, you're going to replace it hopefully with some more, but you're going to use the money that's in your bank account in the next 12 months, aren't you? Inventory, same principle. You're going to sell that inventory, potentially buy some more or produce some more, but it's going to be turning over quite quickly. And then any amounts that are due from customers, because you very much expect to be able to collect that money. So they're all considered to be current assets. So that's the first section, assets. Second section, liabilities. So liabilities, that's what a business owes. So it might owe it to banks, it might owe money to suppliers, it might owe money to tax authorities. So we have different types of liabilities, non-current liabilities, which are typically for AAT long-term loans, so bank loans. And then current liabilities, things such as trade payables, so money that we owe to our suppliers, or short-term debts. So things like, if you think about short-term debts, overdrafts. Yeah, no one takes an overdraft long-term, do they? So it's a form of short-term debt. Yeah, so you expect to pay it back. So that's the second section, liabilities. The third section of statement of financial position concerns this thing known as capital, which you may also see referred to as equity. Yeah, so it includes the owner's investment in the business, plus any retained profit, minus any drawings. So I've got on the screen right now just a very simple layout of a statement of financial position, assets, liabilities, capital. So we've got assets, we've got equipment of £5,000, inventory of £1,200, bank of £2,300. So we've got total assets then of £8,500. Liabilities, it's made up of trade payables at £1,000. So now what we can calculate is this thing known as net assets. So net assets are simply total assets minus liabilities. Yes, so total assets minus total liabilities gets us net assets. In this case, £8,500 minus £1,000 of liabilities gets us net assets £7,500. Next part of the statement of financial position then, capital. So we've got owner's capital, so this is the money that the owners have invested into the business. Yep, £5,000. And then retained profit. So this is profit that's built up over the course of time. We've got £2,500 of retained profit in that business. So the total capital, £7,500. Now hopefully you can see that assets, net assets, so the assets minus liabilities, so net assets equals capital. Yeah, and it all balances. £7,500 net assets, total capital, £7,500. That's just the greatest example of the accounting equation in action. Remember, the accounting equation, for those that can't remember, assets equals liabilities plus capital. So we've got assets, £7,500, sorry, £8,500, equals liabilities, £1,000, plus capital of 7.5. So 8.5 equals 8.5. Yeah. So moving on then, profit from a statement of profit or loss. So what we looked at in the last episode, the statement of profit or loss, the profit from that is transferred at year end into the capital section of a statement of financial position. Yeah. So if we remember when we just did the statement of profit or loss from last week, we had £8,600 of net profit. Now, if I take that £8,600 of net profit, what's going to happen at the year-end date is that £8,600 net profit would increase the owner's equity. Yeah, unless, of course, they took some money out as drawings, which, let's face it, most businesses would do. And that's what ties these two statements together. Yeah, the performance of the business, from a profit and loss perspective, affects its overall value, which is what's reflected on a statement of financial position. So what are some of the mistakes then that we should look out for when we're preparing statements of financial position? Well, one thing that we see a lot of is students mixing up current and non-current items. Now, obviously, the statement itself will still balance, but if you're starting to do some more complicated things like trying to work out, current ratios, which is, trying to work out like current ratios, quick ratios, and so, which I'm not going to go into in too much detail today, but if you were trying to calculate some ratios based on these numbers, the fact you've misallocated current and non-current items means that you're calculating the wrong ratios, aren't you? Yeah. The other thing is that sometimes people include items that should be on a statement of profit or loss on a statement of financial position. So income and expense accounts. So income and expense accounts belong on a statement of profit or loss, not on a statement of financial position. Yeah. The other thing that people miss out is leaving out retained profit from capital. So they understand that a business owner has invested some money into that business, and that's very much his capital. But they forget that capital is increased by retained profit within the business. Yeah, so just don't forget to include retained profit within the capital section of the statement of financial position. And then the final and probably the biggest thing, ensuring that total assets equal liabilities plus capital. Yeah, so it's that's the check to make sure it's right. Yeah, total assets should equal liabilities plus capital, and if it doesn't, you've done it wrong. Yeah, it is as simple as that. If it doesn't balance, it's wrong. Yeah. Now, the best way to avoid all that is to group your trial balance accounts carefully before you start. So make sure, like I said last week when we were looking at a statement of profit or loss, identify the items that go on a statement of profit or loss from your trial balance. It's very much the same thing. Identify which elements belong on a statement of financial position, and then go into a little bit more detail and say, well, these items are current assets, these items are non-current assets, these items are current liabilities, non-current liabilities, and these items are capital or equity. And then you can just transfer straight out your trial balance into the statements, and it becomes a lot easier. So why does this statement even matter then? So the statement of financial position is arguably one of the most powerful tools in accounting, because it shows whether a business is solvent, i.e. whether it can meet its obligations. Yeah. How liquid it is. So, what's its level of liquidity? And what is the owner's stake in this business worth? Yeah. Which are all interesting things, and all things that business owners want to know, and that certainly small business owners definitely want to have their finger on the pulse around. Are we a solvent business? What's our liquidity look like? And what's my business actually worth? Or what's my stake in this business worth? And together with the statement of profit or loss, it gives a complete picture of how the business is doing and what direction it's heading in, i.e. is it going to hit an iceberg? Yeah. Or is it heading for the moon? Yeah. It allows us to start to answer some of those questions around, what's the future for this business? Is this business, is going to fly, or is it going to sink like Titanic? So let's just recap then what I've covered in today's session. So what we've covered is the statement of financial position, which shows assets, liabilities, and capital. The statement is the implementation of the accounting equation. So the accounting equation, assets equals liabilities plus capital. This statement is the working example of that equation. Yeah. Net profit from a statement of profit or loss, that flows into the capital section of statement of financial position. And the statement of financial position's overall aim is to provide that snapshot of the financial health of the business. So with that then, it brings me to the end of the first series of Debit Credit Done. I hope you found it helpful as we've walked through the fundamentals of bookkeeping and financial reporting. But don't worry, this is not the end of Debit Credit Done. We are definitely not done. A brand new series is on its way, and starting Monday, 4th of August, I'm pleased to announce we're launching a new 10-part podcast series that's aligned directly to the AAT Level 3 module, Financial Accounting Preparing Financial Statements, more commonly known as FAPS. And episodes in this series will be released twice a week, every Monday and Thursday, and will guide you step by step through the full unit with explanations, examples, and challenges designed to support your progression through the unit. So make sure you follow or subscribe and do not miss the launch. Yeah, the series will launch on Monday, 4th of August. yeah, with episodes on a Monday and a Thursday. Yeah, 5 weeks, 10 episodes. And finally, if this series has helped you or helped to explain anything, make accounting concepts simpler, which is really my aim, is to help students build confidence and help them along their journey with AAT. If it's helped you, all I really ask is if you could share it with fellow learners, leave us a review on one of the either Spotify or on YouTube. It really does help other people discover this podcast, which just helps more people. As always, thanks for listening. Keep your confidence growing, your entries balanced, and until next time, I'm Dean, and this was Debit Credit Done.